know if it's recording on here.
It'll say stop recording.
Oh, there we go. Okay, done. How did Tesla stock do today? Did it do what we predicted in the first episode of Deadshot Investor? Why is everyone shorting Tesla, convinced that Tesla will fail? The answers to these questions and more. Welcome to episode 2 of Deadshot Investor.
I don't even know how much I really made. I forgot, it's a lie. Fuck that, never mind what I got. Came up, that's all me for real.
Were we dead shot correct with our prediction about what Tesla shares would do today? Let's take a look at the chart. Remember our trend line that we added? Guess what happened? Right at the beginning of the day, we'll go to the 5-minute chart, where every bar equals 5 minutes. Right at the beginning of the day, Tesla tanked right as soon as the market opened. This is pre-market trading. Right as soon as the market opened, it tanked. And guess where it tanked down to? It tanked down to exactly our trend line. See the bottom of that candlestick? Touches our trend line. So it went right down to the trend line and found support. And as you can tell, and let me add a trend line really fast up here for the resistance. As you can tell, there are only two points that touch on the resistance. But look at the strength of this trend line. It's touched 1, 2, 3, 4, 5, 6 times to the penny. And it's come very close a couple more times after that. The more times that the stock touches the trend line and bounces up, the more we can count on that support as being legit. So, what did we predict? We predicted that this was going to bounce around in between the trend line and the 200-day moving average. We have Morgan Stanley, which has come out and said that Tesla could surge to $400 and then get cut in half in 2018. They call it a roller coaster ride, and I agree. It's Seeking Alpha. There was an article that said that they believe that the debt market is tightening up on Tesla. The bears are saying that Tesla is spending $500,000 an hour, and it's true. And that they're saying, though, that because of that, Tesla's going to run out of cash, and they're going to declare bankruptcy, and that then the courts are going to take over Tesla, part it out, and sell all of its parts, and it'll be worth zero. Obviously, this is bad. Third quarter earnings report, Deepak Ahuja, who is the CFO of Tesla, was asked a question about basically what's going to happen with their money in the near term here. And he says, firstly, as we continue to ramp up the Model 3, our cash flow from operations is going to increase or improve significantly over the next few quarters. And this is the positive virtuous cycle of cash flow or working capital that Model 3 provides us, because we effectively pay our suppliers later than we collect from our customers. Also this quarter, our CapEx payments will start to decline as we pay off over the next couple of quarters all the remaining Model 3 related CapEx. So they've had to spend tons of capital expenditures, CapEx. They've had to spend tons of capital to be able to ramp up for the Model 3, including purchasing a robotics company, purchasing a company that writes software for robotics. I mean, hiring the smartest people in the world to be able to do all of these things. And so they've spent just tons and tons and tons and tons of money. And that's why Model 3 CapEx is about to stop, because they've got all the robots. They've got all the software. So he says there should be an improving trend over the next 2 quarters or 3 quarters. So that's important to know. How does Tesla think that it's going to make out without increasing its debt? But if you look here, are they going to run out of cash? If you look at this chart, you can see here that the cash flow, the free cash flow, is quite low. It's going to require cash infusions, and he's saying that they can actually get that from the Model 3 ramp up and from the Model 3 sales because of the timing. And another place that they're getting it from is the deposits on the semi, the deposits on the Roadster number 2, because they're requiring full deposits for the Founders Series versions of those. So they're going to get hundreds of millions of dollars on the reservations for those as well. So Bulls would say that cash flow isn't a concern. The Seeking Alpha article argued that the long-term debt is going through the roof. This is obviously very, very true. So if you see here, the long-term debt is increasing like crazy. But Tesla is not following the traditional method of business. They're following the Amazon business model, where profits are not a concern. They're not even a consideration. Innovation and expansion must be achieved regardless of the cost. Amazon went from books to household items, now to groceries, pharmaceuticals, auto parts. They're just taking over the world like a black hole. They're absorbing industry after industry after industry. So Amazon has proven that this model works, and basically long-term debt be damned. They don't care. And Tesla is following that same exact model. And if you don't believe that that model works, go ask Sears or Kmart or JCPenney or Abercrombie and Fitch or Macy's, all of the other companies that have been just incredibly adversely affected, and many of them under bankruptcy and going out of business because of Amazon's business model. It works. Amazon is now even getting into groceries. So Tesla's following this model. They're expanding from luxury sedans to SUVs with the Model X to mass market cars with the Model 3. They're also expanding with the Gigafactory into mass production, actually doubling global supply of lithium-ion batteries. And they're also getting into wall packs, power packs, solar shingles, solar panels, superchargers, and a network of those, autonomous driving software and hardware, electric vehicles, and now even semis and supercars. And that doesn't even talk about pickup trucks, or the Tesla app, which is going to take out Uber and Lyft. So there are tons and tons of industries that they are going to disrupt, and just like Amazon, which has disrupted so many industries. So Tesla's on track to disrupt all of these industries, and it takes long-term debt to be able to finance this incredible expansion of their company. Has Tesla been successful in disrupting the luxury sedan industry? This is a nice little graph I wanted to show. The Tesla Model S in first half of 2017 has absolutely just annihilated the luxury sedan vehicle market. Over 30% of the market is now theirs. They didn't take on a Kia or some other weaker model, we're going to take out Citroen. They went right after Mercedes, punched them right in the mouth. They went right after BMW 7 Series. They went after Porsche, Audi, Lexus, and Jaguar. They went after the most coveted crown jewel of all of these big name companies, and they just stole 30% of their market share. So the bulls will welcome long-term debt. They'll actually demand it. They'll cheer for Tesla to follow the Amazon model and to change the world, just like they did in the luxury car sales. So that's kind of an interesting graph. But, say the shorts, Tesla's financing some of this growth and research and development through dilution of shares. Tesla's issued additional shares, which waters down shareholders' positions. And so let's take a look at that. What we have here is the shares that are outstanding. The shares that are outstanding continue to grow. So if you look at that graph and you don't look at it contextually, you would say that's awful, okay? Just as you would look at this graph and say, man, that's awful. Or this graph and say, man, that's awful. So if you look at this graph, you'd say that's awful too. So with all these awful graphs, how could Tesla possibly justify printing more and more and more shares and diluting the shares of shareholders like me? And I think that our friend here, Galileo Russell from Hyperchange, addressed this in an interview with Cheddar and covered it very well. So let's take a look at that.
Just another quick point.
I think it's
I look at Tesla as when they IPO'd, they had about 95 million shares outstanding. Today they have 175 million. So that's an increase of about 9% per year. In the same period, their revenue has grown from 117 million to this year about 11.5 billion, a 93% compounded annual growth rate. So their revenue per share has gone from $1.23 to 66 bucks in the past 7 years. So as a long-term investor, I'm saying, even though they're diluting, even though they're losing all this money, I'm getting a ton of value being generated per share still.
So, tons of value and money being generated per share still. Earnings call, and he said, to put that into perspective, 5 years ago, we had only delivered 2,500 cars. So the Tesla fleet has grown by a factor of 100 in 5 years. I would expect 5 years from now to be at least an order of magnitude beyond where we are right now, and possibly even close to 2 orders of magnitude. But for the skeptics out there, I'd like to say, ask them which one of you predicted that Tesla would go from 2,500 units delivered to 250,000 units delivered now. So in 5 years, Tesla's gone from 2,500 units delivered to 250,000 units delivered. So that is an insane growth rate. That is Moore's Law growth on steroids. So the bears say also that Tesla can't deliver on the Model 3. But did Tesla eventually, in parentheses, deliver on the original Roadster, the Model S, the Model X? And let's talk about the Model X. It's incredibly complex to build a Model X. So if Tesla can deliver late on all 3 of those models, I believe strongly that Tesla can deliver late on the Model 3. So tomorrow we will watch the graph and we will see if it comes down again to this trend line, and we'll see if it comes up to this moving average. If it comes down to the trend line, I predict it will bounce up, and if it hits the moving average, I predict it will bounce back down. I think that for the rest of the week, it will continue to bounce between these two within the ascending triangle. This is the big ascending triangle, and I believe it will bounce around in between the trend line and the 200-day moving average. Things that could change that. If they announce fourth quarter sales of the S and X, which will be, of course, not coming till the end of the year, but if they say, oh, we're on pace for this many deliveries of S and this many deliveries of X, I think it could break through that 200-day moving average very, very easily. If they give us a weekly production ramp-up of the Model 3, or we start seeing serial numbers out there that show that they are cranking out the Model 3 with no problem at all, then that could also break us through the 200-day moving average. But if Tesla announces before they announce those good things that they need to raise more capital, that's it. It's going to break through the trend line and go down, and that is not going to be good. So we'll see what's going on. But my prediction for the rest of this week is that Tesla stock is going to bounce around in between these two. I don't foresee it going below the trend line, and I don't foresee it going above the 200-day moving average this week. So that's it for Deadshot Investor. Peace out.
Little bitch.